Joining us now is Barry Bannister, Chief Equity Strategist at Stifel. Barry, you got to calm our nerves a bit. We had Scott Meinert on here from Guggenheim. He says 20% could happen. Of course, that was 5% ago. Nouriel Roubini, whatever you think of that, says maybe a 40% headline is coming. You don't think we're going to get a big flush, do you?
No. When you think about what happened, I mean, if you inflation adjust the S&P 500 index, which is what you have to do to look at any long period, we had a 27.3% decline in the first half. We bounced up through August, and then we got Jackson Hole. We're now back in real terms, inflation adjusted, to that June low, 36.66, if you inflation adjust. So the question is, do we break down to new lows? And for that to happen, the Fed doesn't have to just stay where it is. It actually has to get more hawkish in the November 2nd and December 14th meetings. I just don't see that. I expect good inflation data, good prints to come in lower. And I think that the jobs market's going to cool off. JOLTS rates that Powell talks about have already topped. So again, you have to incrementally turn the screw and get more tight. Otherwise, what has been done is priced in. And I think the Fed's done enough to bring down inflation.
Yeah, you just wonder, though, Barry, by bringing down inflation, are they also bringing down the economy? And if they bring down the economy, they bring down corporate earnings, which then brings down multiples, which then brings down the market. How much faith do you have in the Fed to navigate this? I feel like it's that Denzel Washington movie where he's a pilot. At one point, he's completely upside down.
Yeah, it's a good movie. There were 7 recessions before Paul Volcker, okay, the Volcker shock in around 79 to 81. And in those 7 recessions, the market fell about 1 month before the official recession began. It was declared after the fact. After Volcker, there were 5 recessions. The market fell right on the dot. A lot of those were panics or crises. So the market's not going to be 6, 9, 10 months ahead of a recession. You look at yield curves, 10-year minus 3-month or 10-year minus 2-year. They indicate a recession by mid-23, figure June, July, August. Market's not looking that far ahead. They're just looking at what the Fed's going to do in the next 2 meetings and what's going on with the economy in the fourth quarter. So we don't have a lot of reasons to worry about it. I guess if you're just looking out 3 months, if you look out 6 months, 9 months, yeah, I think there's real trouble. In fact, I think that the Fed's rate hike that they did yesterday was the one that will be looked back on as the mistake.
Shepard Smith here. Thanks for watching CNBC on YouTube.